Welcome back to another Introduction to Accounting video. In this video, we're going to be focusing on the flow of data from source documents to the general journal to the general ledger and finally onto our trial balance. So let's get started. So how does data flow in accounting? First, we need to analyze the source documents to see which accounts are affected. And remember, every transaction in accounting affects at least two accounts. At a minimum, one account will be debited and one account will be credited. And source documents can be such things as an invoice, check stubs, receipts, cash register tape, bills, etc. So step 2, after we analyze the source documents, we need to enter our transactions into our general journal. We'll go into detail on what the general journal is on the next slide. After our transactions are entered into the general journal, we then need to post the journal entries to our general ledger accounts. After everything is posted to the general ledger, or better known as the GL, we then need to prepare the trial balance. The general journal is essentially a day-by-day listing of all the transactions of the business. Each entry should show the date, which accounts are being debited and credited, a brief description if necessary, and the dollar amounts of each debit and credit. The posting reference column, or post ref, will be filled out when the amounts are transferred to the general ledger, so nothing needs to be entered here until that point. A couple of things to note here. Notice that your debits are always entered first, followed by your credits, and also notice how the description is indented a little underneath the credit entry. This is so it's easier to differentiate between where the accounts stop and where the description begins. If it were lined up right below the credit entry, a reader might think it's another account that needs an amount assigned to it. The last thing to note is that you always want to leave space between your entries. This makes it easier on the reader and will create separation between the various entries. Moving on to step 3 in our process, we're now ready to post to the general ledger. But first, what is a general ledger? This is a listing of all the accounts used by the business as well as the detail of every transaction that is recorded to that particular account. It essentially shows all the detail that makes up the balance of an account. General ledger accounts are assigned account numbers and are arranged in the same order as the chart of accounts, which we'll see in the next slide. The ordering also follows the order of our accounting equation, so starting with our assets, liabilities, owner's equity, revenue, and then our expenses. As you can see from the picture, the GL looks almost identical to the general journal. The only difference is that there's balance columns so you can track your ending balance and a spot at the top where the account number is listed. So we have our account listed here and our balances over here. Other than that, they're practically identical. When we post from the general journal to the general ledger, we need to move a few pieces of important information. In a manual accounting system, posting is done either daily or at regular intervals depending on the volume of transaction the business has. And most businesses today should and probably are using some sort of computerized accounting software like QuickBooks, Xero, or one of the other many that are out there. In an accounting software like QuickBooks, this is done instantly, so there's no need to manually post, but it's still very helpful to know how the information flows even if it's being done for you. First, we need to enter the January 1st date from the journal to the GL. So step 1 here, we're moving the date from our journal to our general ledger. And we're moving the January 1st, 20 date down here to our general ledger. Next, we need to enter in the debit balance since debits are always entered first. You can see this step notated by the number 2. So we have our $330 phone expense debit from our journal, and that's going down to our phone expense general ledger account. So you can see that the description here, paid phone bill for $330, comes from our journal here. So we paid our phone bill and we have our $330 debit. The next step is we need to update the balance. So there's no beginning balance in this phone expense account, so our $330 debit balance that we just recorded is our actual ending balance in this account so far. Our last step is to update the post-ref columns in both the journal and the GL. Since we're only on the first page of our journal, we enter in J1 in our post-reference column on our general ledger. So we can see that here. And we have our page 1 here and the J indicating journal. Now, if this was like the 5th or 6th page of our journal, we would put J6 J6 or J7 or whatever that page might be here. Next, we need to enter in our account number from our general ledger, which is account number 550 here, and we need to enter that into our post reference column of our journal. Now, the reason we do this is for traceability purposes. So if you had a general journal with many pages, this post reference column sort of gives you a clue as to where you need to go in your general ledger. And conversely, if you're in your general ledger, the post ref column there tells you where to go in your journal. Before we discuss the last step of posting to the trial balance, I figured we should briefly touch on the chart of accounts. And the chart of accounts is essentially a listing of all the accounts used by the business arranged numerically in the same order as our accounting equation. So our assets are first, followed by liabilities, then owner's equity, and finally our revenue and expense accounts. There's also a standard numbering convention that is typically used when creating your chart of accounts. As you can see from the slide, assets typically begin with 100s, liabilities with 200s, and so on. There might be some slight variations to this depending on the complexity of the business, but most will follow this scheme to some degree. For large businesses, you could have account numbers that are many digits long. And the reason for this is that the businesses might have different entities, divisions, branches, and the account numbering would have to have some sort of numerical codes to indicate which business it applies to. And while this is getting out of scope for an introductory course, I just wanted to make you aware of it. So for now, for simplicity purposes, we'll just use this numbering scheme. The last step in the process involves posting our GL accounts to our trial balance, or TB for short. This is a crucial step because it pulls all the accounts with balances in one place so we can check to make sure that our debits equal our credits. One important thing to note is that just because the trial balance balances, it doesn't mean that we've classified our transactions properly. So for example, you might have accidentally coded the purchase of some business equipment to your repairs and maintenance expense account when it should have been coded to your machinery and equipment fixed asset account. So as you can see in the picture, we have our account numbers in the first column, followed by the account name, and then our debits in one column, followed by our credits. And the way you get this information onto your trial balance report is you go through your general ledger and take the ending balance for the period, whether it be a week, a month, a quarter, or a year, and you put them on the trial balance. You can even see that we have our $330 phone expense balance here that we brought over from our general ledger. The accounts must be listed in the same numerical order as your chart of accounts. This is a very important step for when you start transferring the information to the actual financial statements, like the balance sheet and the income statement, which we'll talk about in a later video. So that concludes our topic on how data flows from the original source documents all the way through to the trial balance. I know that that was a lot of information, so don't expect all of that to make sense the first time around. Like I've said in previous videos, learning accounting is a marathon, not a sprint. And like most things, repetition is the key. The more you do it, the more it will start to make sense. So thank you for watching. Until next time.